Welcome to Explain the Charts. Today, October 8th, we're diving into the fascinating world of EURUSD, analyzing the latest news and market events that are shaping the currency pair's trajectory. The news surrounding EURUSD is dominated by a tug-of-war between the European Central Bank's ECB, dovish stance, and the U.S. Federal Reserve's Fed, more hawkish outlook. The ECB is expected to continue cutting interest rates in an effort to stimulate the Eurozone economy, which is facing a number of challenges, including a slowdown in industrial production and lingering inflation pressures. This dovish stance is putting downward pressure on the euro. Meanwhile, the Fed is holding steady with interest rates as it continues to combat inflation, potentially boosting the US dollar. This is leading to a stronger US dollar relative to the euro. We're also seeing a flight to safety sentiment in the market, which is further strengthening the US dollar and weakening the euro. With these contrasting monetary policies and the global economic backdrop, EURUSD has been experiencing a lot of volatility in recent weeks. So, let's turn our attention to the charts to get a clearer picture of where EURUSD is headed. First, let's look at the one-day chart for EURUSD, which gives us a broad overview of the currency pair's recent performance. Zooming out to the entire chart, we can see that EURUSD has been in a downtrend since early September as the euro has weakened against the dollar. This downtrend is evident in the series of lower highs and lower lows that we see on the chart. Looking at the last few weeks on the daily chart, we can see a clear breakdown of a key support level at 1.0900, signaling further downside potential. However, it's important to note that there's a significant resistance level at 1.0700, which could act as a potential floor for EURUSD. Now, let's move to the one-hour chart to get a closer look at the short-term trend. Here on the one-hour chart, we can see that EURUSD is currently consolidating in a range between 1.0950 and 1.1000. This range is characterized by the currency pair trading back and forth within this narrow band, suggesting that the market is indecisive about the direction. Looking at the recent price action on the one-hour chart, we can see that EURUSD has been bouncing off the 1.0950 support level multiple times. This suggests that there's some buying interest in the market at this level. However, the 1.1000 resistance level has been acting as a ceiling for EURUSD. The price has repeatedly failed to break through this level, highlighting the selling pressure in the market. If EURUSD can break above the 1.1000 resistance level on the one-hour chart, it could signal a shift in sentiment and a potential breakout to the upside. On the other hand, if the price falls below the 1.0950 support level, it could indicate a continuation of the downtrend and a potential move towards the 1.0700 support level on the daily chart. Finally, let's take a look at the 15-minute chart to get an even more granular view of the short-term price action. Here on the 15-minute chart, we can see that EURUSD has been trading in a tight range over the past few hours. This tight range suggests that there's little conviction in the market about the direction, which is also reflected in the low volume. While there's some minor bouncing off the 1.0965 support level, it hasn't been strong enough to break out of the range. With such tight consolidation on the 15-minute chart, it's difficult to predict the short-term direction of EURUSD. However, it's important to watch for a break above or below the range to get a better idea of where the price is heading. In summary, EURUSD is currently caught in a tug-of-war between the ECB's dovish policies and the Fed's more hawkish stance. The daily chart shows a clear downtrend with a breakdown of a key support level at 1.0900. However, there's a significant resistance level at 1.0700, which could act as a potential floor for EURUSD. On the one-hour chart, EURUSD is consolidating in a range between 1.0950 and 1.1000. A break above the 1.1000 resistance level could signal a shift in sentiment and a potential breakout to the upside, while a break below the 1.0950 support level could indicate a continuation of the downtrend. The 15-minute chart is showing tight consolidation with little conviction in the market about the direction. Looking ahead, it will be crucial to monitor the upcoming economic data releases from the Eurozone and the US, as these could provide key insights into the future direction of EURUSD. Keep an eye on the news and watch for any shifts in sentiment or unexpected events, as these could also significantly impact the currency pair.